when in doubt, zoom out. We're still on the right trajectory, and we are about to enter the parabolic bull phase. Okay, that comes in 3 months after the halving event. We know the halving event is coming up. There's no doubt. There's nothing to go delay it. Nothing. Okay, it doesn't matter about the macro conditions. It doesn't matter about the whales or manipulation or black rocks or whatever. The halving event is set by code. It's going to happen in April. And every time it happens, the parabolic bull stage starts. Okay, and this time around, I think it's just going to be the same. If you look at what happened in 2020, after that nasty COVID dip and we had the halving event happen, we actually waited a little bit. We trended up a little bit and then boom, like clockwork, we just shot up to the moon, right? So if we're following the same trajectory as 2020, it could be the same thing. We have a little pump and then boom, huge trajectory up to the moon, right? That's what we're waiting for. So don't be frightened of the market. You could be disappointed, but make sure you don't get fudded out of the market. Make sure you stay in, stay calm, focus on the future, continue to watch me and subscribe, and I'll get you guys through this. But yeah, we're starting off the day a little bit weaker. I noticed that Bitcoin, still hovering around 41,000, not moving so much. There are a few standouts, but overall still a little weak. People are still wondering what's going on. Now, as for ETF news, I mean, it's business as usual. These big guys are just scooping up more and more and more and more Bitcoin. If you think about it, who benefits the most from a drop? Well, obviously, the people that want to buy. And the people that want to buy the most are these fund managers like BlackRock and Fidelity and all these guys. That's why they're scooping up. Day 5 was yesterday. They scooped up 10,600 Bitcoin. And BlackRock is now one of the biggest holders of Bitcoin. But they're just getting started. BlackRock holds about 1.2 billion worth of Bitcoin now. Fidelity also holds 1 billion worth of Bitcoin. And we're only in the first week, guys. These guys are loading up by the boatload. So you can see on the very left side, BlackRock holds approximately 1.2, 1.3 billion worth of Bitcoin. Fidelity has surpassed 1 billion, a little bit over a billion, right? And then even Bitwise, if you add Bitwise, ARK, and Vesco together, they're certainly close to a billion. So you notice the trend, there's a lot of billions going in. But what's also a trend is Grayscale. Now we're waiting for that to stop. Because if it wasn't for Grayscale selling so much, man, we would have had another $3 billion worth of Bitcoin flow into funds and locked in. But unfortunately, Grayscale is selling by the billions too. They sold approximately 2.2 billion. So we're waiting for that to end. Overall, the net flow in is more than net flow out. So that's good. But it's being dampened a little bit by Grayscale. Now, some argue it's not their fault, that if their product is being sold off, then they have to sell off Bitcoin. But you know what? It makes me wonder, because they kind of knew that this was happening. And that's why they raised their fees up so much. Their fees are 5 times as high as any other ETF provider. And I think they did that on purpose, first of all, to try to get people to stop for selling. Because they have a lot of insiders. They've been operating Grayscale Bitcoin Trust for like 10 years. Or, yeah, something like that. So there's a lot of insiders that want to cash out. So I think that's number one. And number two is, yeah, they just know that ultimately, can they really compete with the BlackRock and Fidelities of the world when it comes to ETFs? I don't know. I think they're thinking it's going to be a very hard challenge. That's why they put their fee up at 1.5% when everyone else is like 0.3% or 0.2%. You know what? Grayscale CEO thinks that not everyone will survive. Hopefully Grayscale does. Hopefully he's not referring to himself as one of the ETFs that won't survive and defends his highest fees in the industry by saying that, well, because they've been around for a long time, everyone trusts them the most. I don't know if that's true. Maybe Bitcoin people will trust Grayscale more than, say, BlackRock and Fidelity. But everyone else on the planet that's a stock trader, that's an equities holder, that's an ETF holder, I think they believe BlackRock and Fidelity way more than they do Grayscale. So again, this fee notion, why is this so high? Why is Grayscale selling off, right? I think there's a lot of things going on. There's a lot of things going on. One thing is for certain. These guys right here, these guys on the left side, BlackRock, Fidelity, Bitwise, ARK, Invesco, Franklin Templeton, Valkyrie, Van Eyck, they will continue to load up on Bitcoin, and they will buy and buy and buy and buy and buy some more. So next time you think about why is the Bitcoin market, why is the crypto market going down? If you can't figure out who's selling, just think about who it benefits the most, especially right now. Who benefits the most with Bitcoin being low? Well, the big boys are trying to buy as much as possible. Just think about backwards rather than trying to say, well, who's selling right now? Well, how about who's trying to buy right now? But anyways, what about the short squeeze that's coming up? Yeah, I said short squeeze. We got 800 million, close to a billion of short positions loaded up right now because, again, everyone thinks that Bitcoin's going to go a lot lower, including Jim Cramer, who I covered last night. Jim Cramer says Bitcoin's going to have a nasty, nasty fall. And that got a lot of shorters worried because inverse Cramer is never wrong when it comes to Bitcoin. But nevertheless, if we go back up to 45,000 and we get some momentum and we get pushed back up, there will be about 800 million in shorts liquidated, and we will have that massive short squeeze once again. That is around the corner. Again, when in doubt, don't short Bitcoin. The surest way to lose money in crypto is to short Bitcoin. Don't do it. Don't do it. You just never know when Bitcoin strength comes back up, the momentum is back, and then you just get wrecked. If you think Bitcoin's gonna go lower, just you could sell off. But to short it, no good. So that's why I never shed a tear for any shorters that get liquidated. Okay, I mean, if you're long, you get liquidated. Yeah, that sucks. I'll shed a tear for you, but not shorters. Shorters do not deserve my tears. A lot of you guys know. A lot of you guys are very smart. Okay, you've been watching me for years. You know the drill. You hold on DCA, right? But it's not just us. It's not just the retail investors. If you notice, people are tracking. There are so many whales that are buying and buying and buying and buying. They're buying the dips. They don't always time it right. Doesn't mean that whales or extremely rich people know when the bottom is. No one knows. No one on Wall Street knows. Any Wall Street guru will tell you, no one knows where the price will be next week or tomorrow. They're just patient. or they manipulate the market. A lot of times it's the second. But in this case, this whale who decided to buy about $30 million of Bitcoin, try to time a little bit. But anyways, at this level, why not? 100 Bitcoin there, 250 Bitcoin there, went a little heavier, 350 Bitcoin there. That's how you do it. And it's not just this person I saw on Whale Alert, another person that just bought 1,000 Bitcoins off of Coinbase. This was just an hour ago, about 45 million. There are a lot of whales, a lot of people that are buying the dip. It's not just retail investors. They know. It doesn't matter if you have $5 in the market or 50 million in the market or 5 billion in the market. The strategy is the same. You hodl and you buy low, or DCA, whatever it is. Hodl or buy low and sell high. All the investors will tell you that's how you make money by investing. Buy low and sell high. Well, that sounds obvious, right? But it's not easy to buy when things are low. When things are dropping, everyone's afraid. Everyone gets out. And then when the market recovers, everyone comes in towards the top and FOMOs. That's not how you do it.